momentum in a gold bull, in a precious metals bull market is set by gold. The first buyer is the fear buyer. And it's only after gold has established the precious metals narrative among generalist investors that silver begins to move. But when silver does begin to move, it goes further and it goes faster. Whether or not we have reached this tipping point or not is a subject open to conjecture. But the performance that we've seen thus far, the relative performance between gold and silver, has been borne out in prior bull market cycles. I am not sure why this set of circumstances occurs. I can just tell you from observing 4 prior precious metal cycles that does seem the way it performs. Perhaps when the generalist investor gets attracted to the precious metals narrative and comes down into the space, that the higher historic volatility of silver and the lower unit cost of silver attracts them. The truth is, I don't actually know the answer. That's probably a question that you should pose to a market historian like Eric Sprott, as opposed to a moneylender, a credit analyst like Rick Rule.
And in terms of performance, do you favor one over the other?
I have much more of my net worth in gold because I own it for insurance purposes. I like to make money. I don't need to make more money. And gold and silver is a more speculative asset. I have about 2.5% of my equities portfolio in silver equities, where I'm exposed to very high risk. It wouldn't surprise me to see that 2.5% of my portfolio turn into 20% of my portfolio if the performance of the silver equities mirrors the performance of silver equities in past bull markets. But at 71, I'm a little more risk averse than I was earlier in my career. And the consequence of that is that I'm personally overweighted gold because I have a desire for safety more than a desire for speculative gains.
Did you know only 0.5% of North American investment assets are in gold and silver, while historically this number averaged 2%? According to Rick Rule, this low allocation hints at a potential explosion in demand, especially if we revert to historic norms. And here's the kicker. Gold always leads the bull run, but once silver starts moving, it skyrockets further and faster. Rule dives into how market dynamics from BRICS nations to Mexico's political landscape could ignite silver's next big surge. But why does he hold more gold himself? And how could silver outperform it this time around?
If you measure weight by the weight that the broad market has involved in the sector, I think you'll come to some startling conclusions. The market share of precious metals and precious metals-related assets relative to other asset classes in the North American market, the U.S. and Canada, is that the market share of gold and precious metals relative to all assets available for savings and investment is only 0.5%, which is to say that 0.5% of North American investment and savings assets are denominated in gold and silver. The 4-decade mean market share was 2%. So gold doesn't need to win the war against the U.S. dollar. It doesn't need to win the war against the euro. It needs to lose less badly. If we had reversion to mean, demand for precious metals would quadruple. Relative to that, which is to say relative to the market share, my own allocation in my own portfolio of physical gold and gold shares relative to other asset classes exceeds 10%. So by conventional measures, I'm 20 times overweight. Maybe that puts the question in context. I suspect that you have some listeners who are 100%, which I would consider to be substantially overweight. There is a fair bit of byproduct supply. And remember that although silver is denominated in U.S. dollars, it's held around the world. The silver price in Indian rupee, or the silver price in renminbi, or the silver price in Chilean pesos is substantially higher relative to its mean than its price in U.S. dollars, which means that there probably has been profit-taking by people who denominate themselves in other currencies. When you talk about the fact that the silver price has to take out its all-time high at 50, remember that that's a nominal all-time high. If you inflation adjust that $50, if you account for the deterioration of the purchasing power of the U.S. dollar, my suspicion is that gold would have to take out $100, not $50, to take out its real inflation-adjusted all-time high. And I'm not saying it's going to happen, but I don't think that's uh, price performance that's out of line. If you observe the period 1970 to 1980, the silver price went from $1.50 at the beginning of the period to $50 at the end of the period, and it was not price controlled. At least with regards to silver dollars, it wasn't forbidden for Americans to own silver. Similarly, in the period 2000 to 2010, if my memory serves me well, the price of silver escalated from $5 or $7 again to $50, a tenfold increase in the silver price. Am I suggesting that we're going to go from $35 to $350? Not necessarily. But when people set upside price targets on silver, they don't seem to take it into account history in the first instance, and they don't take into account the very, very, very small market share of precious metals relative to historic means. It's consistent with history. Gold has always established the narrative. It's always established the momentum. The beginnings of a precious metals bull market are always led by gold, and then silver follows through. If I'm correct in suggesting that only in the last 15 or 20 weeks have we seen an inflow of retail funds into precious metals denominated ETFs, the GLDs of the world, it makes perfect sense that gold would continue to lead silver for a while until you get broader retail participation, until the generalist investor gets attracted to the precious metals narrative. When that happens, if past is prologue, silver begins to outperform gold, and historically it outperforms it by a substantial margin. If you're going to be in the silver business, you're going to be in Peru and you're going to be in Mexico. Rough countries. The third country is Russia, a rougher country. I have found in my career that while political risk is real, technical risk is more real. I would rather have a great deposit that was worth stealing than a crappy deposit that wasn't worth stealing in a good country. And Mexico, as you say, is deteriorating politically. I have found in Mexico, and I'm no expert, but I have found a lot of support for mining in the regions where mining occurs. And I would suggest to you that the opposition to mining occurs more in the center, more around the intellectual leftists in the party in power. There are other problems in Mexico, however, in the Sierra Madre Occidental, where we think of as where the silver mining districts are. And those are sociological problems related in particular to narcotraficantes, narcotics traffickers in English. And those problems aren't going to go away. If you are going to be a silver speculator, you are going to have to be in Mexico if you want high quality deposits. And if you're going to be in Mexico, you have to deal with the political problems and you have to deal with the sociological problems. I've been dealing with them now for 30 years, and they have occasionally caused me heartache. Certainly, they have caused me to experience fluctuations, drama, if you will. But I need to say, over time, being invested in Chile and being invested in Peru, being invested in Argentina, in the silver space, has been extremely rewarding to me. I look back at Silver Standard Resources, financed at 72 cents, hit a high of $45. Declined a lot since then, down to 12 or 15? From a 72-cent base, it doesn't feel too bad. The same thing with Pan American Silver. If you are really, truly going to be a silver investor or a silver speculator, you have to accept the political drama. You also, when you look at Mexico, have to listen to what the president-elect has had to say, rather than the way that she has quoted. She didn't say that she would ban open pit mining. She said that open pit mining had to have the local community support in the communities where it exists. I believe that local power brokers will probably try to manipulate the circumstance a little bit so that they can gain personal advantage from politics in Mexico. But I don't believe that communities where the alternative to employment in the silver industry is growing rice and beans in the desert will continue to be anti-silver for any substantial period of time. I guess what I need to say is if you're going to be in the silver equities, and I am, you have to swallow twice, and you have to accept the political risk, and you have to accept the social risk. If you aren't going to do that, you are going to be involved in silver exploration in jurisdictions that are geologically marginal compared to Mexico and Peru.
Now you know about the potential surge in gold and silver, so the next thing you need to understand is how central banks might be impacting this market even more. Check out our next video for a deep dive into that. And don't forget to like, comment, and subscribe to stay updated on everything happening in finance and precious metals. Thanks for watching, and I'll see you in the next video.